For years, the American crypto industry has been fighting a regulatory Cold War. It was a battle against confusing rules and a government that seemed openly hostile, threatening to chase innovation right out of the country. The story of crypto in the US wasn't about clear support. It was a messy patchwork of regulations, a system many called regulation by enforcement. If you were a developer, an entrepreneur, or even just an investor, it felt like you were navigating a minefield in the dark. The rules weren't just unclear, they were contradictory. Different agencies were all fighting for control, each claiming their own jurisdiction. This chaos didn't just slow down progress, it actively pushed it away. The brightest minds and the most exciting projects started looking for friendlier places to build, countries that decided to embrace the future instead of fighting it. The risk wasn't just a theory anymore, you could feel it. The United States was on the verge of losing its spot as the world's leader in financial and tech innovation. It seemed more likely the next Google or Apple of the digital asset world would be born in Hong Kong or Europe, not Silicon Valley. But that's all changing. A radical shift is happening, centered in the White House. While you were sleeping, a plan was set in motion to tear up the old playbook and unleash the great American crypto revolution. This is how it's happening. To really get the scale of the change that's happening right now, in late 2025, you have to understand the mess we're coming out of. For the better part of a decade, crypto regulation in America was a story of confusion, hostility, and paralysis. The system wasn't built to help crypto grow, it felt like it was designed to kill it. The heart of the problem was a simple question that regulators couldn't agree on. What even is cryptocurrency? Is it a commodity like gold or oil that the CFTC should oversee? Or is it a security like a stock, which would put it under the control of the SEC? This wasn't just some academic debate. The answer to that question changed everything. It decided how assets could be created, how they could be traded, and who was even allowed to be involved. The SEC, under the previous administration, led by Gary Gensler, took a very aggressive stance. Almost all crypto assets were securities. This led to his famous regulation by enforcement strategy. Instead of writing clear rules for the industry to follow, the SEC just started suing people, including some of the biggest crypto companies in the world. The message was loud and clear. Either obey laws written almost 100 years ago, laws that just don't fit with decentralized technology, or prepare for a legal battle. This created a climate of pure fear and uncertainty. Companies were scared to launch in the US, and those that were already here had to spend millions on lawyers instead of on innovation. On top of the federal confusion, you had this patchwork of state level rules. A company trying to operate across the country had to deal with 50 different sets of regulations. The compliance costs were insane, creating a huge barrier that kept smaller innovators out. This mess didn't just hurt businesses, it put consumers at risk. Without a clear federal framework, there were no consistent rules for things like stablecoin reserves or protecting people from market manipulation. We all saw what happened with Terra/Luna and the collapse of FTX. Those disasters were used as an excuse to crack down even harder, but critics argued they were actually proof that a clear, working regulatory system was desperately needed. The result of all this chaos was a brain drain. Innovation didn't stop. It just packed its bags and moved to places like Dubai, Singapore, and Europe. For years, crypto leaders had been begging for just one thing: clarity. Not a free pass, but clear, sensible rules of the road. They warned that without it, America was going to be left behind, just a spectator in the next evolution of the internet. This was the situation as the 2024 election kicked off. Suddenly, crypto wasn't a niche issue anymore. A huge, politically active, and well-funded community was fired up and demanding change. And that set the stage for one of the most dramatic policy reversals in modern American history. The inauguration of Donald Trump in January 2025 wasn't just a change in presidents, it marked a seismic shift in the government's entire philosophy on digital assets. The era of hostility was over. The new administration's stated goal was to make the United States the crypto capital of the world. This wasn't just talk, it was followed by immediate action. Just days after taking office, on January 23rd, 2025, President Trump signed a landmark executive order that reversed the course set by the previous administration's more restrictive approach to crypto. The order declared a new national policy to support the responsible growth and use of digital assets. But it did more than that. The order established the president's working group on digital asset markets, a task force with a clear mission. Chaired by vocal crypto advocate David Sachs, the group was given 180 days to review every crypto-related rule across the government and propose a single, comprehensive federal framework. This was the move the industry had been waiting for, something to finally break the bureaucratic logjam. The administration also took a firm line on a U.S. central bank digital currency, or CBDC, citing major risks to privacy and financial freedom. The White House declared its policy was to oppose the creation of a CBDC and threw its weight behind the CBDC Anti Surveillance State Act, which had already passed in the House. The idea of a government controlled digital dollar was out. Instead, the policy was to favor the growth of privately issued US dollar backed stablecoins. This was just the opening shot. The message from the White House was clear: the war on crypto was over. This shift in attitude flowed down to the regulatory agencies. At the SEC, Gary Gensler was out, and his replacement, former Commissioner Paul Atkins, known for his pro innovation views, took over. The agency began a review of its aggressive enforcement actions and launched a new crypto task force led by Commissioner Hester Pierce, a longtime champion for clear rules. The old approach of trying to jam new tech into old laws was ending. The new goal was to create rules that actually fit the technology. The new direction from the White House and the agencies cracked the door open. But to truly kickstart the American crypto revolution, the changes needed to be locked into law. After years of partisan gridlock, the legislative dam finally broke in the summer of 2025. First up was the most urgent issue: stablecoins. In July 2025, President Trump signed the Guiding and Establishing National Innovation for U.S. Stablecoins Act, the Genius Act, into law. This was historic. It was the first ever comprehensive federal rulebook for stablecoins in the U.S. The Genius Act did a few critical things. It clearly defined who is allowed to issue a payment stablecoin, limiting it to licensed banks and other approved institutions, and most importantly, it mandated strict one-to-one reserves. The law requires stablecoin issuers to back every digital dollar with a real dollar or a cash equivalent held in separate accounts and subject to regular audits. This was a direct answer to the collapses of projects like Terra/Luna and the fears that brought down FTX. The Genius Act was designed to ensure that a dollar-backed stablecoin is always worth exactly $1. In doing so, it turned stablecoins into a powerful tool for projecting US dollar dominance into the digital age. With stablecoins settled, Congress moved on to the bigger fight over market structure. During that same crypto week in July, the House of Representatives passed the Digital Asset Market Clarity Act of 2025, or the Clarity Act. While it still needs to pass the Senate, its framework is the second pillar of this revolution. The Clarity Act finally tackles the decade-long turf war between the SEC and CFTC. Its main goal is to draw a clear line between what's a security and what's a digital commodity. The act would give the CFTC primary authority over the spot markets for most digital assets, including Bitcoin and other decentralized cryptocurrencies. This is a huge shift. It's an acknowledgement that these assets behave more like commodities than stocks. The SEC would still have a role overseeing the initial sale of new tokens, but once a project becomes truly decentralized, it would fall under the CFTC's jurisdiction. Proponents argue this finally ends the crippling uncertainty and provides the clear legal path the industry needs to thrive in the US. But the administration's embrace of crypto didn't stop there. In March 2025, President Trump signed another groundbreaking executive order establishing a U.S. strategic Bitcoin reserve. This was revolutionary. The US government officially declared it would treat Bitcoin as a strategic reserve asset similar to its gold reserves. The order mandated that the government's massive stockpile of Bitcoin seized in criminal cases would no longer be auctioned off. Instead, it would be held by the Treasury as a permanent national asset. The order also created a US digital asset stockpile for other seized crypto, but the Bitcoin was special. It was to be held, not sold. White House officials dubbed it the creation of a digital Fort Knox. This sent an unbelievably powerful signal to the world. The United States wasn't just regulating crypto, it was accumulating it as a matter of national strategy. It was a bet on Bitcoin's future as digital gold. That is a massive amount of change in a very short time. We've gone from a government that was openly hostile to crypto to one that is building a strategic national reserve of Bitcoin. The implications are staggering, and we're about to get into what this all means for you as an investor, for the US economy, and for the future of money itself. But first, if you're getting value from this and want to stay ahead of the biggest shifts in finance, hit that subscribe button and turn on notifications. Things are moving fast, and you don't want to miss what comes next. This combination of executive action, new leadership, and landmark legislation has completely redrawn the global crypto map. The Great American Crypto Revolution is the new reality. The number one goal of the past decade, regulatory clarity, has finally been achieved. The era of uncertainty is over, and we're already starting to see the results. One of the first effects is the great homecoming of the crypto industry. Companies that had fled the US are now planting their flags back on American soil. With a clear framework from the Genius and Clarity Acts, major players are setting up US based operations and applying for licenses. This flood of capital and talent is creating jobs and helping ensure the next wave of blockchain innovation happens right here. The goal of making America the crypto capital is starting to look less like a slogan and more like an economic strategy. For Wall Street, this new era is the green light they've been waiting for. The Genius Act allows banks to issue their own stablecoins and hold digital assets for customers. Adding to this, Congress passed a resolution to overturn a controversial SEC rule known as SAB 121. That rule had effectively stopped banks from offering crypto custody by making it too expensive. With that barrier removed, the floodgates for institutional adoption have been thrown open. Banks can now offer the same secure, regulated services for digital assets that they do for stocks and bonds. This is a critical step for bringing mainstream money into the space. This revolution is also changing the story of the US dollar. For a while, it looked like crypto was a threat to the dollar's dominance. This new policy flips that entire idea on its head. By creating a strong regulatory framework for US dollar backed stablecoins, the Genius Act turns them into a tool of American financial power. Regulated digital dollars can now fly across the global financial system with speed and the full backing of US law. Far from being replaced, the dollar is getting a 21st century upgrade, its reach extended through blockchain technology. For the average person, this new era brings both opportunity and responsibility. The new laws offer protections that never existed before. Buying a stablecoin regulated under the Genius Act comes with the assurance of one-to-one backing and audits, but regulation doesn't eliminate risk. The markets will still be volatile, and you still have to do your own research. The goal of this new framework isn't to guarantee profits, but to make sure the markets are fair and transparent. Looking ahead, the road isn't perfect. The Clarity Act still needs to get through the Senate. There will be more debates about balancing innovation with consumer protection. And the rest of the world is still a patchwork of different rules. Getting all the major countries on the same page will be the next big challenge. What we are witnessing in 2025 is a complete change in direction. The United States has made a strategic pivot from being an antagonist to digital assets to being an enthusiastic supporter. The regulatory Cold War is over, and a new chapter of American leadership in financial technology has begun. Through a series of powerful executive actions, the new administration has swept away restrictive policies and stood against a surveillance-style central bank digital currency. Through the Genius Act, America has created the world's strongest framework for stablecoins, securing the dollar's digital future. With the Clarity Act, it is on the verge of solving the decade-long turf war, giving innovators the certainty they need to build. And with the US Strategic Bitcoin Reserve, the government has made an unprecedented commitment to Bitcoin as a national asset. These are the pillars of the great American crypto revolution. They are reversing the brain drain, welcoming talent back home, and paving the way for a surge of institutional investment. The goal is clear: to build an environment of responsible innovation, protect consumers with clear rules, and secure America's place as the undisputed leader in the digital economy. The foundation has been laid. The revolution is here. The only question now is, what will be built on top of it? What do you think this new era means for the price of Bitcoin and the rest of the crypto market? Is this the start of the next great bull run? Let us know your thoughts in the comments below. And as always, thank you for watching.